Coming at you live from the Kalkine TV studios, this is Sage, and we're bringing you the Sectoral Pulse by Kalkine TV, a special show covering all sectoral movements from the markets for the day. Australian shares rose on Thursday and helped by energy and gold stocks that tracked higher prices of underlying commodities, although gains were capped by a disappointing earnings report from supermarket giant Woolworths. Shares of Ansell were among the top gainers on the benchmark for the second day in a row, rising nearly 5%. The medical devices maker projected strong sales growth for the half year and full year on Wednesday. The top percentage loser was Woolworths Group Ltd, as the company signalled an end to the pandemic-powered sales boost it had enjoyed last year and said its current quarter was trading flat. The S&P ASX 200 is trading up today, gaining 25.90 points to 7,090.60. The top performing stocks in this index are CIMIC Group Ltd and Nickel Mines Limited. Over the last 5 days, the index has gained 0.50% and is currently 0.06% off its 52-week high. On the sectoral front, gold stocks rose 2% as bullion prices jumped overnight after the US Federal Reserve kept interest rates unchanged. Resolute Mining was among the top gainers on the sub-index. The miner reaffirmed its 2021 guidance despite posting lower gold production on quarter. The energy index rose 0.74%, tracking Wednesday's rise in oil prices, and Viva Energy Group led the gains on the index for a third straight day with a 2.8% rise. The metals and mining index rose 0.6%, helped by a more than 2% rise in gold miner Newcrest Mining after it beat production estimates for the quarter. However, Fortescue Metals Group was a laggard with a near 2% drop after it reported flat third quarter iron ore shipments. In other markets, Japan's Nikkei was up 0.21%, while S&P 500 E-minis futures were up 15 points. In New Zealand, the benchmark S&P NZX 50 index rose 0.11% to 12,660.6. The top percentage gainers were Z Energy Limited, followed by A2 Milk Company Limited. And now let's get to the news that matters. The industry body Wine Australia has released new figures which show that the Australian wine exports to China has crashed to just $12 million in 4 months ended March 31st from $325 million a year earlier. The drastic downfall in the export figures is because of the hefty tariffs of up to 212%, which is stopping Australian producers to ship wine to China. Australia's biggest wine group, Treasury Wine Estates, was hit with a tariff of 175.6%. It had previously been selling about $500 million a year of high-priced wine to China and had the most to lose of all the Australian players. And moving on to the commodity markets updates. Crude oil prices climbed more than 1% on Wednesday after a massive drawdown in the US distillate inventories and ramping up of refining activities. And Brent crude oil futures for July delivery traded 0.29% up at US $66.72 per barrel, whereas the WTI crude oil futures for June delivery traded at US $63.85 per barrel US, down by 0.02%. Distillate stockpiles in the US fell by around 3.3 million barrels during the week. However, the refining capacity utilisation rate rose to 85.4%. The prices were additionally buoyed by the decision of OPEC and its allies to increase the supply from May. However, the continuous rise in coronavirus cases in India has partially weighted the prices due to subdued demands. And meanwhile, Saudi Arabia is negotiating to sell a 1% stake in the state-backed Saudi Aramco to a leading global energy company. Gold prices gained on Wednesday due to a fall in the US Treasury yields and a weaker dollar. Gold futures for June delivery traded at US $1,784.45 per troy ounce, up 0.59%. The demand for US Treasury yields tumbled after the US Federal Reserve kept the rates unchanged, supporting the economic recovery. And the US 10-year Treasury yields took a U-turn from the previous 2-week high levels after the Fed's announcement. The recent rise in the US bond yields have outshined gold and pushed it down by 6% this year. And now, let's take some updates from the currency market. The dollar was on the defensive near 9-week lows on Thursday as a decidedly dovish outlook from the US Federal Reserve gave a green light for the global reflation trade, and Fed Chair Jerome Powell quashed speculation about an early tapering of asset buying, saying it was not time yet to begin talking of it. Unemployment was still a long way short of where it needed to be. The Fed's dogged dovishness was a marked contrast to the Bank of Canada, which has already begun to taper its asset buying, sending the dollar sliding. Another notable break lower came against the Norwegian crown, where the dollar hit its lowest since October 2018. The crown had been carried higher by rising oil prices as the global economic recovery boosts demand for commodities, a trend that is also benefiting the Australian and New Zealand dollars. The dollar also shed much of the week's gain on the yen from Wednesday's top of 109.07. A holiday in Japan could keep it contained in Asian hours. Against a basket of currencies, the dollar was down at a near 9-week low of 90.554. Thanks so much for joining us, and that's all for now. Stay tuned with Kalkine TV for more live market updates, and we will be back with more news on markets, economy and diverse themes and sectors. Sage signing off.